The lessons I learned from almost 5 years of trading. What's up guys, welcome to a new video, and in this video I want to talk about some important lessons I learned after 5 years of trading the markets. So let's get started right away. Number one, multiple ways to make money. This is very, very true. In my time as a trader, I have seen so many different ways of making money in the market. It's insane. I've seen people using all kinds of indicators. I've seen people using price action. I've seen people using fundamentals. A lot of people talk trash about indicators, and they basically tell you that they are useless and they shouldn't be used. They're slow, they walk behind price action, etc. In my mind, using indicators is just another way of reading price. You will basically view price just in another way. And if that way is better for you, then why not use an indicator? So there are multiple ways to make money in the market, and it's essential to find a way that works for you. My way is almost completely mechanical. It's based around liquidity concepts, around Wyckoff, and around statistics. That's what fits my personality, and that's how I make my money. But if you like indicators, by all means, study indicators, test different indicators, and go from there. The next point is edge is key. You've heard me spoke about many times before the concept of edge. It's quite simple. The edge means the odds are in your favor in the long run, which means you're going to make money in the long run. And you need an edge in some form to make money, and without it you're going to lose and lose and lose, and that's just how the game works. So in order to win, you need an edge, and how you develop that edge, how you get that edge, is totally up to you. There's no right way or wrong way to go about it. It's all about positive expectancy. I've made more videos about it on my channel, so you can check it out. But the point is, you have an edge. You either do that by having a strategy with a low win rate and a high R, high win rate, lower R. It doesn't matter. The point is, you need an edge, and the edge needs to fit with your personality. Most people blame the psychological issues or their losing trades or their lack of performance on basically on the way they read the market, or how they feel, or they can't focus, or they have psychological issues, etc. The point is, usually these people trade without an edge, and they don't even know it. And that's why they lose money. They don't lose money because they feel bad or they have bad mental issues. They usually lose money because they trade without an edge. So it's essential you have one, and how you get one, again, is up to you. If you get it in the discretionary way, indicator-based trading, expert advisors, whatever the fuck you want to use, get that edge. Point number 3, or lesson number 3, is strategy that fits with your personality and lifestyle. This is a very important lesson I learned. Back in the day when I started trading, I started with a very discretionary method of trading. And I did it because I liked the concepts behind it. But I didn't know that discretionary trading didn't fit my personality. I figured it out years and years later that I needed a more mechanical approach, and that's what I do now. But if you're trading a concept or a strategy you've learned from someone, and you just can't seem to follow it, you can't make any money, chances are that the strategy doesn't fit with your personality. And if that's the case, you will never, ever make it work, and you will never make money with it. So it's very, very important that the strategy fits with your personality. And how do you figure it out? I figured it out by looking at my past. I've always been very good at mathematics, physics, And these are all subjects where you're either right or wrong. They're very rule-based, they're very logic. And that's also the way I think in my mind. And that's when I started thinking like, holy shit, I'm trading a way that is completely different. It's more feel-based and I needed more structure. And that's how I started with developing a mechanical approach. And it's also something you should do when you are going to find a strategy and test. And the next point is lifestyle, because back in the day, I still used to have a job. And I needed to trade around it. But if you want to be a day trader and you have a full-time job, that's never going to work. So that's also something you need to keep in mind. If you're still working, maybe start with swing trading. I'm still swing trading, even though I have all the time in the world to trade and watch the charts. I just like swing trading, and that's why I do it. So that's lesson number 3. Lesson number 4. So a lot of people always will tell you that trading is 90% psychology. I do agree that psychology is important, but most of the psychological issues people have come from a lack of confidence in the strategy they use. So, for example, they've learned a strategy from someone else, they see them make money, then they try it themselves and they lose money and they think, why the fuck am I losing money? Well, it's quite simple. You're not that person. That person might have put in years in testing the method, learning the concepts, studying, and you, on the other hand, you learn it from him. You don't know any background information. So as soon as you start having a losing streak, which you will have, which is normal, you start to doubt yourself and you start to get these psychological issues. And the next trade you take that's going up in profit, you don't hold it until target because you're scared to lose, and it goes on and on and on. And it's all due to a lack of confidence. So it's important to backtest, it's important to journal, it's important to test, demo trade. Basically, you need to build as much confidence as possible in your edge. And I say edge, not strategy, because if you're building a lot of confidence in a losing strategy that hasn't got any edge, you're still going to lose money. So edge is always key. It has to fit your personality, but then it's up to you to build a lot of confidence in your strategy. So even if you are hitting a losing streak of 5-10 trades in a row, you still be able to stick to the plan and come ahead of the drawdown. So that's lesson number 4. Lesson number 5 is more of a technical lesson, which is liquidity. I use liquidity. It's one of the main concepts in my trading. And in my mind, it's one of the concepts any trader should know about, at least to some extent. To use in their own trading. And liquidity basically means the ability for a market to be traded at a certain price level. Forex is a very liquid market, but you still can study certain areas on a chart where there most likely will be a lot of liquidity. And then once you study what happens once liquidity gets triggered, so once a lot of buying or a lot of selling gets activated, and you study the reaction, you can basically get an idea of what bigger traders are doing, and then you can potentially join these players. So if you're interested in liquidity, watch the other videos on my channel. I do have a few videos about liquidity. Simply go to my channel, search for liquidity, and you will find a small explanation about it. In my coaching, I will go way deeper into it, but this is, in my mind, a very important part of any strategy, and you can use this concept to build your own strategy around it. Lesson number 6. Coaching is essential, and there is a lot of hate around Forex education, coaching, and I completely agree, because most people out there that are educating shouldn't be educating, because they are not real traders. They demo trade, they don't make any money trading or whatever. I do make money trading. I'm also currently working on a racket because I do manage some funds and I want to basically stay a bit under the water. I don't want to be that exposed, but I am working on a separate account to build a racket so that I can actually show you guys that I make money trading. So that's coming soon. But you can also on my website see me trade live via someone else. So you can basically see that I trade profitably because it's not fakeable or anything like that. But the point is, coaching is essential. And as soon as I started to actually work with someone as a coach, that's when I made a lot of progress, because before that I started with reading books, reading articles, watching videos, talking to other people. And there's a point to do that and you will learn some things about it. But the real growth happens when you actually get a mentor and a coach that will help you to grow. But few things about finding a coach: find someone that you resonate with, so that you like the way he teaches, you like his approach to the market. It's also very important because, like I said earlier, the approach has to fit with your personality. Find someone with a that's just very professional. He has a great website, so not some guy on Telegram advertising account management or whatever, but someone that's actually professional, someone that shows some proof of trading, someone that has a lot of experience, proof of performance. Those kind of things are definitely something you should look out for. So um, in my mind, coaching is essential. A bit of a plug in here. I do coach people. I don't have very much time left because I'm just very busy with coaching some clients at the moment, but I do have a few spots open still. So if you're interested, you can head to my website and see what I do, see what I offer. And if you don't like it, you just don't order it. I only want to work with people that are serious. So yeah, those are 6 important lessons I've learned in around 5 years of trading. So yeah, if you liked this video, please leave a comment, subscribe to the channel because more is coming soon, and some special things as well, which you will learn a lot from. So yeah, if you still have any questions, leave a comment down below and I'll speak to you guys in the next video.